Hi, welcome to this Day, which is on the 11th of January. On Saturday, we'll just be looking at a pair that we think offers a really good risk-reward trading opportunity for the week ahead, which is GBP CAD long. Now, in terms of GBP CAD, we've done a lot of videos on it over the last few months. At the back end of last year, we really focused on it, and it gave us one of our best profits of the year. Now, in terms of British pound, it's pulled back to a key level of support. If we hold that level of support and move off the level, I think it's a great risk reward buying opportunity. For us, the long-term fundamentals behind the chart, or the big fundamentals, firmly bullish for the GBP. So a lot of upside potential. Now what we are going to do is we are going to look at the trade setup. So go to the chart right now, but just obviously keep in mind it's my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can get live access for a limited period to our member center by just simply clicking the link beneath this video. Right, let's go and look at the trade setup. Right, GBP CAD monthly chart. Just look at the chart very quickly. Just see the really big levels of support and resistance. Also on this chart, you can see my target, which you can't see on the daily chart. Now, in terms of, just for new viewers, we became very interested in the pound when it came down to this 160 level. Fears of a hard Brexit priced in, and you've basically got some nice blue candles there and a little red this month. And where we are now, obviously we're off the high, but we're up 1,000 pips from the key 160 level. How much more upside is there? Longer term, I think 190. So another 2,000 pips on the upside. This is of course longer term. Brexit candle, or the vote out of the EU, that whole candle to be retraced, because that's all that's basically been dominating this pair. Now, in terms of hard Brexit, those fears, I think, not very big now. I think it's going to shift to the data, the economic data, and when we look at the fundamental sentiment, clearly favour the pound. Now, in terms of this candle exhaustion on the UK election, I'll talk about it a bit in a moment. What we had was a break of the 170 level there, held it, came down but held it. Now coming in to test that 170 level is the level to key off. We need to see strength off the level. If you're coming in fresh, you buy strength. It looks a really good risk to reward trade in our view. I've said that already, haven't I? Let's go and take a look at why by going and looking at the daily GBP CAD daily. We'll just do the technical levels in a moment. Now, just before we do, I just want to look at the fundamentals and sentiment behind the chart. That's making us just so bullish of the GBP longer term. So let's just go through these points I've listed out very quickly. Hard Brexit, the odds are extremely low. Now, we felt that when the pound was at 160, and I think the market now has come round to that way of thinking, and they're going to focus more on the economic data between the UK and Canada. Now, if we take the outlook going forward, I think it favours the UK and the GBP. Now, in the UK, recent budget by the government, they're going to be doing plenty of fiscal stimulus in the economy. It's going to help growth. It's also going to keep inflation at levels where the Bank of England will be on hold in terms of interest rates. Now, the market actually expects a cut. We do not think that is going to occur at all. If it did, it's kind of in the price. I think the Bank of England on hold. Okay, now point number 4, pretty significant really. The UK saw substantial improvements in the current account and basic balance of the UK in the third quarter of last year, and most analysts, experts, economists were saying it should deteriorate because of Brexit nervousness. It didn't, and now that Brexit uncertainty has been removed, I think you'll see further improvements. So very bullish for the GBP. Pound remains cheap historically due to the Brexit sell-off. It does. I mean, we've seen how far it sold off, 190 down to 160. We've only really got back a third of that decline, and that decline was really mostly due with Brexit uncertainty. Now, two sides to the currency pair. What's going on in Canada? Well, the Canadian economy has been doing pretty well over the recent months, but it's peaked. It's not going to get better. Okay. Now, the market do not see the Canadian economy peaking. They think interest rates will be on hold till mid 2020. I think the Bank of Canada in the next 2 months will signal an interest rate cut. And I think that's very bearish for the Canadian dollar. Why do I think they're going to signal a cut? Well, basically, they've said in their statements they're very concerned about global growth, global trade. And if we look at global trade and growth, well, trade is contracting, clear from the data, and so is global GDP. And I don't see that turning around anytime soon, which means commodity prices will fall. Canada very sensitive to the outlook for the global economy. Now, I think in the coming week, US-China trade deal is going to be signed. Now, in terms of a lot of analysts, experts, economists, etc., they see this as kind of bullish for global trade and growth. When the deal, or phase one of the deal, is signed, it's going to be very minor. It's no more than a truce between two superpowers. It doesn't solve the big problems they've got in terms of trade. I think it's basically a kind of waiting game. Yeah, Trump looking to win the 2020 election, China hoping he gets defeated. It's going to have just such a minuscule impact on the global economy. I think the market's going to be disappointed in that. We'll see, obviously. But, the kind of bullish view is in the price on the trade deal. What else have we got? We've got risk off potentially. We've got risk on at the moment, but in risk on, GBP's going up. If we get risk off, big sell-off in stocks, I won't say it's going to happen. I think it could potentially happen. We do get big risk off, then the pound is going up quicker, so get an additional boost. Now, in terms of the technicals, nice big move up. Obviously, you get retracements along the way. This is a good retracement, or the biggest retracement, and we come to a key level. Just get my line across. Sorry, that line is too thick. Let me make it thinner. Just bear with me. Just go and find. There we go. Come back to the 170 level, bounce a bit below it, back above it. 4 very small candles, indecision. The volatility is dropping down. Points to a big move in our view. Could obviously be either way. We think it's going to be to the upside. Now, in terms of this pair, if you wanted to come in, where would you come in? Short trajectory. So there. Got blue and a red candle there. Tops roughly in line. Just above Friday's candles. So that double top there gets taken out. Got the 20-day moving average. I think if we get through there, that will signal a move to the upside. So basically 171.30. Okay. Now, in terms of if we do break hard, we're looking for a move up to 175, then take the spike tail, then obviously off to our longer term targets. Where would you put the stop? We just want to be clear of these two tails here. So I'm going to say 169.30. Okay. So you're risking, well, a couple hundred pips, aren't you? But yeah, I think the next phase of the uptrend is going to get in motion. And we've seen from the monthly chart plenty of long-term upside. I think this dip is a great buying opportunity. Good risk to reward. I actually like all 3 commodity currencies. But I think this one in particular looks pretty good because you've got that really nice big level of support, which is holding and then if we break out after low volatility, should follow through. And I like it when the 20-day moving average snaps if I'm bullish. Okay, got a great trade here when it snapped, because then we'll look for it to provide support. So it finds support at the 20-day moving average here, then here, then here, then obviously you get the big accelerated move to the upside. Now, in terms of that big accelerated move to the upside and the retracement, just too many speculators were long. On the prospect of Tories winning the UK election, people bought before, they bought after the event as well. Too many speculators long. That gave the nice correction. Support being found. Breakout off to the upside. That's what I think. We shall see if it happens. Right, that is the video for today. Thank you very much for watching me as per usual. Take care. Have a good day.